Well, KPIT is in fact a stock in focus because the company is now listed and trading as only the IT services business. So it's the engineering business, which will be listed at a separate time. Rima joins in to give us more details with regards to the demerger process and the listing of the particular businesses as well. Rima.
Thanks so much for that. So what you can see on your screen is the IT services business of KPIT as well as that of Birlasoft. Now, estimates for FY20, because you want to value this new company. So revenue estimates are roughly about $500 to $520 million. It should have margins of about 10 to 11%. And the profit, according to the brokerages, should be closer to 300 crore rupees for FY20, which means you're left with an EPS of close to about 11 rupees per share. Now, for the last many years, KPIT has actually been trading at a lower multiple compared to the market, close to about 10 odd times, on account of volatility in its performance, execution, etc. So right now, if you give a valuation, a forward multiple of 10 to 11 times to the EPS estimates of 11 rupees, then we arrive at a price of 110, 120 rupees. If you assign a higher valuation multiple of 12 times with the assumption that there will be some synergies which kick in and therefore the company can actually do better and execute better, then you give it a PE multiple of 12 times on an EPS of 11 rupees, you arrive at a fair value of close to about 130 rupees, which is where the stock is currently. Now, the key to track going ahead is that both the companies have gone through a slow patch in terms of its growth. So Birlasoft in particular had some issues with its top line. But now with some scale coming through, it becoming a $500 million plus type of a company and synergies on account of the integration, does the company do better? That will be the key to track. What is now being left out or what has gotten divested from this business is the engineering business, which has actually done well for the company. It's been a strong point with a growth of 16% CAGR in the last 5 years, and that is expected to be listed on the exchanges in March of 2019. So that will be an important piece to watch out for. So for now, on your screen is the IT services, pure IT services business of KPIT Technology, as well as that of Birlasoft.
Rima, thanks very much for that detailed analysis of the numbers and where could the market price the stock going forward. 131 on KPIT Tech. Biocon is one of the earnings today. I mean, there are actually a bunch, and we will over the next half hour or so on this show spread out more earnings previews. But let's get a quick check from Ekta on Biocon in terms of expectations. Ekta.
Well, actually expected to be a strong quarter, but I think the street already knows that. So the expectation is that, revenue could grow around 30% for Biocon. Margins could in fact improve all the way to 26% versus 21% with a profit growth of around 79%. Remember that probably comes on a low base as well. Now, in terms of the entire Biocon set of numbers, what will really drive growth would be the biologics segment, which is basically a biosimilar business. Now, within the biosimilar business, the one thing which is going to drive growth will probably be the launch of pegfilgrastim in the US, the cancer biosimilar that they launched. And just to put it into perspective, Q2, the biologics segment was up around 136%, which was again aided by pegfilgrastim. So that kind of momentum is probably going to continue into this quarter, and that will probably result in that strong number that we're expecting.
Okay. So that is Biocon for you. The other preview that we will get to you in just a bit is Yes Bank, which also reports number. And actually, you look at the stock. Yes has actually corrected quite a bit. Huge volatility in the share price, and preview in just a bit. Talking about numbers already in, Raymond reported a largely inline set of earnings. Sanjay Bal, Group CFO of the company, is now joining in. Mr. Bal, thanks for your time. Good to have you here. Gross margins were flat, Mr. Bal, at 57%. Could you talk to us what went into that number? Because raw material prices in how were raw material prices rather in third quarter? What will the price? What's the outlook for cotton prices, etc., going ahead? Just talk us through that.
If you look at overall, I would rather focus on the EBITDA margin. I think, and if you see the performance there, it is a performance of 13% revenue growth overall, EBITDA growth of 41%, and margin improvement of nearly 220 basis points. So, yes, there have been cost pressures in this quarter. Wool prices have ruled firm for a branded textile business. Cotton prices are also ruling at a high level with the high MSP prices which have been announced recently. But we've been able to withstand those cost pressures. The businesses have done extremely well in ensuring that our margins are improved We've, of course, it's taken a lot of initiative on the manufacturing side for the branded textiles through product innovation and rationalization of a blend.
Mr. Bal, what was the same-store sales growth during the quarter? And could you talk to us about expansion plans there on the store side?
Same-store sales growth in this quarter was around 8%, so that is very heartening to see resurgence in the EBO channel. For a store expansion plan, we followed a very aggressive plan. This quarter we've added 97 stores, and 95 of these have been franchise-led. So we followed an asset-light expansion strategy. Overall, for this year, we've added 209 stores, and we will continue our store expansion plan next year as well. So that's well on course.
So what's your guidance for revenue as well as margin, both for the next quarter as well as maybe going into FY20?
We've had a very strong last 3 quarters right now. So if you look at the 18-19 year, 3 quarters of strong profitable growth, we have a growth momentum going in our branded textile, branded apparel, and our other segments of garmenting and engineering businesses. All segments are really improving the margins, and all initiatives have been taken to increase top line as well. So that augurs well as we get into the end of the year. We believe this growth momentum will continue. Next year, we believe consumer sentiments and with the GDP growth numbers, macro numbers that have come in, we believe that the consumer demand and the discretionary spends will continue to be high next year as well. So our revenue growth will be intact. We see some cost pressures coming, but preemptive actions have been taken in each of our businesses to manage these costs and to improve margins. So the guidance that we have for quarter 4, to be specific, is that we will grow revenues in high single digits, improve margins by at least 100 basis points, and we will give our guidance on the next year. The outlook is very positive on the revenue growth side, but specific guidance will be given as we come to the end of quarter 4.
Okay. What happened to your finance costs and tax expenses? They were higher. Any particular reason for that? And what might your guidance be on debt as well?
Finance costs, yes, our focus is clearly to monetize some of our non-core assets to pay down the debt, and efforts on that direction continue. In this quarter, we've seen an increase because of a provision that we have made on interest costs for a payment that we have to make for our real estate permissions that we have got, which is the ULC payment that we have to make. So that has to be made in a staggered manner, and we have provided for interest on that as of now. So that is really a result of the increase in provision, as a result of that.
Mr. Bal, the Thane real estate project has received RERA registration. Can you tell us some details? When do you expect work to start there? Also, there was a new report which suggested that the sale of 20 acres Thane property could fetch about 700 crores. So could you throw some light on that as well?
So there are 2 separate news that you're referring to. One, of course, is that we are happy to report that we have secured the Maharashtra RERA registration for phase 1 of our real estate project. We have secured all the approvals to commence this project. We are currently in the process of working out a commercial launch date, which should happen in this quarter. So we are excited about that. Our show flats are ready, and the dates are going to be announced soon. It's in the final stages. The other is, of course, the land sale that you're referring to. So yes, we have reiterated a strategy of monetizing our land assets. So So we will continue to put in efforts to sell a parcel of the land as we seek to develop 20 acres of land. So both of these will be really the core of our real estate strategy.
Okay, all right, Mr. Bal, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Raymond. That stock is lower. And we have Edelweiss, which has also come out with its numbers, and it looks like it's going to be a little bit of a disappointment, which they've reported on the bottom line, where the bottom line, in fact, is down around 3.5% or 3.8%. Revenue, however, has grown around 25% on a year-on-year basis. And it, let's see, in terms of what the segments are on a consolidated basis, it's really broken up between fee and commission, fund-based activities, insurance business, etc. So it seems as though there's a growth which is coming on the fee and commission year on year. It's come in on the fund-based activities at 1942 crores, and premium firm insurance business has also risen to 190 versus 127 crores. So maybe there is a bit of a deceleration or a crunch which is probably coming on the margins. So we'll wait by for the margin picture as well and get you more details on what took place post the revenue figure for Edelweiss at this point. Maybe there could be an element in terms of, higher OPEX which is coming for Edelweiss. Net profit 258 odd crores versus 218 odd crores. Maybe we just need to dwell a little further on the Edelweiss.
Is the Q1Q number right there? Because Y&Y the profits are lower.
Yeah, actually it's a very small figure that I'm looking at. I think Q1Q the numbers are lower. 258 compares to 276, 258 compares to 218, I think, on a year-on-year basis. So let's just try and figure out the Edelweiss numbers. Numbers are also comparable Q1Q, considering that it is also a brokerage in terms of its operations.